It's Thursday, March 2nd. You're watching today's Daily Market Comment at xm.com by Haralambos Pisuros. I'm Christina Marujos. The US dollar traded lower on Wednesday, losing the most ground against the Kiwi, the Euro, and the Aussie. Today, it is in recovery mode against all the other majors. The greenback was weighed by the stronger commodity-linked currencies, Kiwi and Aussie, which were supported by China's better-than-expected PMIs. The euro also added pressure to the dollar after preliminary data showed that German inflation accelerated instead of slowing further as the forecast suggested. Later, dollar traders had to digest the less-than-expected increase in the US ISM manufacturing PMI, with the index rising slightly but staying in contractionary territory for the fourth straight month. Treasury yields rose, and market participants further lifted their implied Fed funds rate path as the prices sub-index of the ISM report jumped to 51.3, sparking fears that inflation may remain elevated for longer than previously thought. Hawkish remarks by Fed policymakers may have also aided in lifting rate hike expectations. Investors are now pricing in a terminal rate of almost 5.5% in September, while they see rates ending the year at around 5.4%. This likely means the market is virtually certain that at the next gathering, Fed policymakers will revise up their dot plot, and especially the median dot for this year. However, the reaction in the dollar has not been fully reflecting the dramatic change in Fed hike expectations. Ahead of the next gathering, investors will have to digest the employment and CPI reports for February, and that's maybe why it is still premature to call for a long-lasting recovery in the US currency. Today, Euro traders will be anticipating the preliminary inflation numbers for February. The headline rate is expected to have continued to decline to 8.2% year over year, while the core one is forecast to have just slid to 6.9% year over year. However, following the hotter than expected numbers from Spain, France, and Germany, the risks may be tilted to the upside. Most ECB officials have been arguing about more bold action to tame inflation, and market participants are currently assigning a 30% probability for a 75 basis points hike at the next meeting. Ergo, an upside surprise in today's inflation numbers could increase the probability for a triple hike and further support the euro. The disappointing ISM manufacturing PMI print, combined with increasing Fed hike expectations, proved a poisoning blend for Wall Street. Although the Dow Jones closed Thursday's session virtually unchanged, both the S&P 500 and Nasdaq fell, with the latter losing the most due to its probably bigger sensitivity to Fed hike expectations. This comes to confirm the view that even if equities rise during risk-on episodes, it's hard to envision indices heading towards their record highs, as higher rates mean higher borrowing costs and lower valuations for firms. This was the Daily Market Comment here at xm.com.